Hi there, good afternoon. You're watching us here on the CNBC-TV18 Market Live on all the social media platforms. I'm Mangalam Maloo. It looks like a weak session so far. In fact, in yesterday's trading session, the gains that we've made, we've all but given up the entire gains of yesterday. We're back to closer to square one now, where we left the markets on Friday afternoon itself. The Nifty has fallen below that 17,900 mark as we speak, down 200 points. The Nifty Bank is the one which is dragging it lower, 650 odd points. Remember, the Nifty Bank has been weak all through the last 10 days or so. In fact, in just the last 3 or 4 trading sessions, and this includes yesterday's gain, the Nifty Bank about 1200 to 1300 odd points. The reason why our markets did well in yesterday's trading session was one, global setup was strong. We were, going into the session with a fair amount of oversold positions, and at the same time, we expect a bounce to happen, and that bounce to be led by the Nifty Bank. Turns out the Nifty Bank did bounce, but not as much as one would have expected. It was the IT pack that led growth because of ahead of TCS's numbers and what the IT numbers were expected. At the same time, the up move that we saw on Nasdaq in the previous trading session. But now, this morning, after TCS's numbers, the management saying that the margins may continue to be under pressure. At the same time, there hasn't been a significant change in the company's demand scenario. We have seen a decline not only in TCS but all the other IT stocks as well, as a result of which. The other pack which is not doing too well in the IT space itself, mid-cap IT stocks which have it worse. The only stock which is actually outperforming today from the IT pack is Cyient, and that on the announcement of its design-led manufacturing Cyient DLM business IPO update. The company had earlier as well in terms of an update coming in. The other big stock which is underperforming today is Reliance. Reliance is currently closer to the lower end of today's trading session, and that's again putting its weight down on the Nifty. We have some support coming in from the FMCG pack, which is showing mild outperformance, but it has been the wont of the market to go ahead and go towards the defensives when the panic sets in. We have advanced decline ratio far in favor of the declines. We have 2 stocks which are declining on the NSE for every 1 stock which is gaining. The only solace that we have here is that this is the exact level from where the Nifty has bounced back in the past as well. 7774 was the December low on the index, and 7900 is where the 100-day moving average of the Nifty is. So will we see any support here and bounce back once again from these levels is the question answers to. Where will we get those answers from? Just watch out for HDFC Twins, HDFC Bank, HDFC Limited, as well as ICICI Bank. And that's because these 3 stocks have a high amount of weightage on the Nifty Financial Services Index. The Nifty Financial Services Index, of course, will be in focus today, more so in the second half because of the weekly options expiry out there. So could there be a case of bears in the Nifty Financial Services being trapped today and a bit of an up move in the last hour of trade? That is something we'll be watching out for. Closely watch out for Reliance. The other stock which is doing well today is Tata Motors as well. This on account of a 13% jump in the global JLR sales that we've seen for the company in the third quarter itself. Let's take some questions now. We have one coming in from Nayanika Verma who says, what does TCS Q3 earnings say about the future of IT stocks? Well, the earnings in the near future at least say that there has to be status quo. We don't see the IT stocks running up after TCS's numbers, primarily because there hasn't been any significant. Even if you look at the revenues improved for the company more than what the street was anticipating, we did see the margins compress, and that is something now all analysts will start to factor in their estimates as well, lower their EPSs, and the valuations then on that basis will look a lot more elevated than what the price correction of these stocks suggests right now. So short point, the global outlook right now is fairly gloomy as well as far as growth from both US and Europe is concerned. So some pockets which are strategic in nature, companies which have products which are extremely irreplaceable might do well, but we don't see a runaway rally in IT stocks, and that's what the TCS earnings say about all other IT stocks. Nishant wants to know about the BFSI stocks. In BFSI, Nishant, it is the public sector banks which seem more resilient than the private sector banks this time around, and that's primarily because of the valuation comfort that they have. They have seen a run up, and today they are seeing a much bigger decline as well. However, for NBFCs, the problems are aplenty. One, because as incremental costs of funds rise and the incremental savings go back into the banks, because banks are also doing a lot of these deposit melas where they are accepting a lot of deposits, the lower form deposits, current accounts, saving accounts from people at higher interest rates. So that kind of fundraising gets difficult for NBFCs. Secondly, that makes it difficult for them to sustain their NIMs or spreads going forward. So those might narrow. And as far as the loans themselves are concerned, everyone is targeting the retail loans right now. So there is higher competition for NBFCs too. So I would say that banks look relatively better than NBFCs, and in that one would choose public sector banks rather than private sector banks, because just primarily because the valuation discount that the public have right now, and the asset quality issues for the entire space more or less has been ironed out. All right, we will wait for some more questions. In the meanwhile, let's just take a look at the markets once again. We have some sort of recovery seen around that 17,900 mark. It's also for the rupee, which is at the highs of today's trading. So if the rupee is doing well, then to that extent the flows will extremely be important as well. The rupee is actually at a 1-month high against the US dollar. So that is another thing we will keep monitoring as well. So to sum it up, it has been a weak day of trade so far, but Nifty is at an important support zone. For the markets to bounce back, we have to watch out for what the Nifty Bank and the Nifty financial stocks do. And while we're at support zones, also important to watch out for resistances on the way up. Levels upwards of 18,100 to 18,150 might continue to face some sort of congestion. And then above that, we have the 20 and the 50-day moving average of the Nifty placed between 18,200 and 18,000. With that, you have a good remainder of today's trading session. Thank you for tuning in.